So let's talk about one of the most common questions that I seem to get, which is how do I start investing? What do I invest into? And what are some things that I should be aware of when investing? And look, investing, it doesn't have to be something that's so taboo to talk about that people avoid discussing at all costs and you'll never hear about it at the dinner table or Thanksgiving or Christmas. In this video, what we're going to do is we're going to break down some different types of investments that might be available to you, but really this video is going to be primarily focused on my personal investing strategy. I want to share my opinion, and I want you to keep in mind that, look, I'm not a financial advisor. I'm just a guy who is sharing his ideas with the internet. So take everything as a grain of salt. Make sure that you are doing your own research on some of these things, and you and only you are responsible for the financial decisions that you make. But if you watch this video in full, I can promise you that you're gonna have a better understanding of different types of investments that might be available to you, as well as maybe a clearer vision on which route you would like to pursue to achieve financial freedom. Now, keep in mind that every type of investment involves some type of risk. Maybe it's a very small risk, or maybe it's a very large risk. That really depends on the type of investment and the potential returns that might be associated with that. So let's talk about one of the first ones here, which is doing something that whenever I don't know where to put my money, I start by putting it into a high interest savings account. And once again, look, I'll probably say this like 5 times in this video, but I'm not telling you to do this. This is just what I personally do. So I put my money into a high interest savings account, which is barely even investing, but it's a start for myself, where I think a lot of people, what they'll do is they'll just have money either cash, literally like under their mattress, or they'll have money in a bank account that's getting them 0% interest or 0.05% interest at like Bank of America or Wells Fargo. Now, the problem with this is that there's something called inflation, and every year inflation is roughly about, say, 2%. And so if you're not keeping up with inflation, your money is literally losing value every single year that it's sitting in a bank account. So just putting money in the bank or burying your money in your backyard somewhere, it's not going to really help you build wealth, because over time it's devaluing. So you're losing value in your money. So something as simple as a high interest savings account generally keeps up with inflation. So right now, I see a lot of high interest savings accounts at about 1.85% up to about 2%. And it kind of goes with the federal interest rate. So if interest rates go up, then the interest rate for a lot of these high interest savings accounts might go up to 2.5% or closer to 3%. And once again, they can go down as well. But right now they're sitting at around 1.85%. I'll leave some links down below for some different accounts that are available to you. A lot of different high interest savings accounts are available. I can use something like CIT Bank, which I am affiliated with. So if you click on the link down in the description below, I might get a small commission for kind of bringing you to that bank. But it helps keep videos like this free, and you obviously don't have to click it. You can go open up an account somewhere else. You don't have to use it. It just helps support the channel and helps me make more videos like this one. So you can use something like CIT Bank, you can use Barclays, you can use Wealthfront, you can use American Express. So many different companies have these high interest savings accounts, but it's something that I like to do just to kind of get me started with making sure that I'm at least getting a couple % interest rather than just losing money in a bank account or having this money buried somewhere in my backyard, right? So that's the first step that I like to do. Now let's talk about 3 other things, 3 other different types of investments and things that you may want to explore for yourself. And one thing that I will say is that regardless of what type of investment that you choose for yourself, it's important to make sure that you really understand how it's functioning. It scares me how many people are investing their life savings into things. Maybe it's real estate, maybe it's stocks, bonds, mutual funds, whatever it is. They invest their life savings into something and they don't take the time to understand what they're actually investing into. So the next one here that we're going to talk about is the stock market. We'll kind of bundle this in with mutual funds, ETFs, index funds. I think a lot of people get confused about this because it just looks scary. If you've never really learned about it in school, because most schools don't teach it, it might look a little bit scary. You hear people talking about their brokerage firm. You hear people talking about their IRAs, their Roth IRAs, their 401ks, their retirement accounts, their custodial accounts, their joint account. Yeah, okay, there's a lot of jargon that goes on here, but what we're gonna do here is simplify it as much as possible. So if you wanna start investing into stocks or bonds or mutual funds or different types of, say, things in the stock market, the traditional type of investing that you probably think of when people hear the word investing, the first step here is to open up something called a brokerage account. And this is pretty similar to opening up a bank account, okay? So it's the same process that you have to go through. If you're in the US, you're probably gonna need your social security number, but you can do this in 5 minutes online right now. There's different types of investing apps you can use as well that are all really easy to use. Now, the one thing I will say is that if you're not in the United States, the brokerage firms that you can open up an account with to start investing, they're gonna be different in pretty much every country or every region in the world. So if you live in Argentina, you're probably gonna use a different brokerage firm to buy and sell stocks than you would if you're in the US, and same if you're in China, or if you're, I don't think we have any Chinese viewers here. Yeah, we definitely don't. No, I don't think we do. But if you're in Russia, or you're in Germany, or you're in Ireland, you're gonna have different options that are available to you. Now in the US, some of my favorite ones, something like Robinhood, M1 Finance, Vanguard, Fidelity, E-Trade. What's great about this is that most of these in the US, it's free to buy and sell stocks. There's no fees really associated with it. And in most cases, you can start with $5, with $10 to start investing. All right, so there's really two different routes you can go when it comes to investing into the stock market. There's active investing and there's passive investing. So first of all, let's talk about active investing. This could be something that what I did when I first started, which was buying individual stocks. We'll take a classic example here and say Coca-Cola stock. You buy a share of Coca-Cola stock. What this means is, let's say it's $54. Let's say that you buy one share. This means that you now own $54 worth of Coca-Cola, the company, okay? Not just like the actual soda. You actually own a piece of that company when you invest into it. Now, people like to invest in individual stocks for various reasons. Obviously, the goal is to find a stock that you think, say you think the stock price should be at $80, right now it's at $50. Therefore, you think it's gonna increase over time, and so you invest your money into it. What I would suggest doing here is pick up a couple of investing books. One of my favorites is called The Intelligent Investor, written by Benjamin Graham. I'll leave a link down to that in the description below in this video. But pick up like a couple dozen investing books, start learning about it. My thing that I really like to do is start small, okay? I think when people start with tens of thousands of dollars, maybe they got some money that they inherited from their great uncle. I don't know why I always use that as an example, but their great uncle gives them $40,000 as an inheritance because they just passed away. Very sad, right? Very tragic. But with this money, people just go and they just dump all this money into like one stock or one investment, and they lose their shirt. And you really hate to see it, but what I would suggest doing is start small with investing. Start with $5, start with $10. Over time, as you learn more, as you read more books, and as you make more mistakes, you're gonna learn from those mistakes. That's what I did personally. I started with $50. I bought one share for $12 Cedar Fair, and over time, I started to grow my money. Then I lost some money, then I made some money, then I lost some money, because over time you learn from those mistakes that you make, and you're probably not gonna make them again because they were mistakes, right? And so it's a great way to learn just from experience. Getting your feet wet, I think, is something that is really beneficial as far as a learning experience goes. So maybe start with a small amount of money. Obviously, it's up to you to decide for yourself, but I've seen too many people lose their shirts and totally just lose thousands of dollars because they got overconfident in themselves. And that's one thing about humans, that people are generally overconfident about their abilities, especially when it comes to investing, about their abilities to make a lot of money. So that's something you want to be aware of. Now, passive investing is something that I actually really like to do these days, and it's something that millions of Americans and other people throughout the world like to do as well. Now, a lot of people, especially people who don't know anything about investing, tend to put their money passively into investments in their retirement accounts. Maybe their employer matches their 401k contributions, or maybe they have an IRA that's set up somewhere, but they don't really understand it. A lot of people doing this are investing passively. So one of the benefits to passive investing is that obviously you don't have to spend as much time thinking about what you should actually put your money into. If you're investing in individual stocks like Coca-Cola and Apple and Google and Facebook stocks, you're probably going to be spending a lot of time reading these financial statements, listening to company earnings, thinking about what the company's next move is. But if you're investing into a passive investment, say something like mutual funds or ETFs, which is exchange traded funds, or index funds, then this is something that is kind of a broad basket of stocks, generally speaking, is what it's going to be. Okay, so what this means is that say something like the Dow Jones Industrial Average. Maybe you've heard people talking about the Dow, how the Dow dropped 600 points today, or it went up 1,000 points today. It's a wonderful day for the stock market. Maybe you've heard about people talking about the S&P 500 or the NASDAQ, or in your country there might be some different sort of stock index things that you can look at, okay? So with these are kind of broad baskets of stocks that people can actually invest into. And the idea here, or at least the theory, is that if you can invest your money into an index fund or a mutual fund or an ETF that contains 500 or 1,000 different stocks, 1,000 different companies, well, if one company in that 1,000 fails, the other 999 will bring it up. That's essentially the idea here, that you're kind of smoothing out your investments by investing into a broad number of stocks. So people like to do this passively. You can do both of these just through your brokerage firm, through your firm that you already signed up with. Maybe it's Robinhood or M1 Finance or Vanguard or Fidelity, whatever it is. You can do that simply by just looking at them, okay? So what I would do is pick up some books on mutual funds, pick up some books on personal finance and investing, some basics of it. It's gonna help you a lot. I wish we could go really in depth on this. I do have some videos that talk about some different Vanguard funds if you're interested in like specific ones and what they may entail. But that's kind of going to wrap up this little section here about investing into the stock market. Let's talk about two more here. And actually, the last one that I'm going to mention in this video, the last investment option that's available to you, is actually where I put probably about 70 to 80% of my money that I make. I put it into this investment. But first, let's talk about number 3 here, which is investing into real estate. And I think the biggest misconception here is that people think that they can't invest into real estate because they only have $47 in their bank account, right? And they say, well, they're looking around and all these houses in their area are worth $250,000. They have $47. It just seems so far away for them to be able to start investing into real estate, buying houses, buying apartments, renting them out, becoming a landlord. My answer to that is that I would suggest going to a local meetup, and this is what's great about real estate investing. There are local meetups in your area. I can guarantee that if you're in a small town, a big city, it doesn't matter where you are, rural, urban, if you're in Georgia, if you're in Ukraine, if you're in Japan, it doesn't matter. There's gonna be real estate meetups where investors get together, they talk about the real estate investments. I would suggest going to some of those. I've been to so many of them and everybody there seems to be very nice. They are going to, in most cases, going to bring you in under their wing and show you kind of the ropes of how they started investing into real estate. So I would suggest doing that. It's just a great way to get your feet wet, and I think it's something that everybody should look into. So much wealth has been created through real estate investments. It's one of the most proven ways to invest and make money over a long period of time. Now, having said that, people who invested into real estate in 2006, well, they probably had some problems during the housing crisis that we had about 10 years ago. So once again, everything, even if it seems like it's going to be a great investment, it does involve risk. You need to keep that in mind. But go to a local real estate meetup and see what happens. And you know, so many people have asked me too. I get tons of messages from people who ask about how to find a mentor, how to find somebody who is wealthy that can kind of show them how they created wealth. Real estate meetups are one of the best ways to do that. People seem to be so friendly, and it might be a Tuesday at 1 p.m. and they're just sitting around because they're a real estate investor and they don't have time constraints in terms of when they have to go to work necessarily. So, all right, so let's talk about where I put most of my money. I'd say about 70% of my income goes towards this investment. This is a personal choice, but it's one that I think has the greatest potential in terms of return on investment, and that is by investing into your own business ventures. Now, this isn't for everyone. This is somewhat controversial because people disagree with this, but it's worked for me pretty well. And I think if you have a smaller amount of money and you're looking to build wealth rapidly, then the stock market might not be the fastest way to grow your wealth. And even real estate can be something that grows over time. You might get 7 to 10% per year is the average numbers that people tend to think of when they think about stock market investing or real estate. But growing your own business is something that I found to be sort of adding gasoline to the fire, because you're not only factoring in money investments. If you're starting with a small amount of money, you're using money and time together to create a much faster growth rate for your investments. And I'll give you an example here. If you've been watching this channel for some time, you might already know this, or if you know me personally, you know this. But when I was really young, I was probably like 11, maybe I was 12, I think I was 11. I started a chicken farm with like 30 some dollars. I bought a few chickens, sold the eggs from those chickens, and then bought more chickens and just kept going back and forth, had like 100 some chickens, and then took that money that I made from this chicken egg farm. I was a really weird kid. I don't know what was wrong with me, but I took this money, bought a lawnmower, bought some mowing equipment, took that money and started to mow lawns in my local area, started to make money from that, took that money, started new business ventures, turned it into 10,000, 100,000, and just kept going in that way where I essentially combined the small amount of money that I had with the time that I had on my hands and created an investment that grew at a very, very rapid rate, and it's still growing very quickly. Now, that's just my personal opinion, and I think if you're really looking for the fastest growth rate, you may want to explore that. I've had business ventures that have failed. I've had things that lost me money, but over time, you sort of get better at it. So that's my 2 cents on investing and options that are available to you. What I would love for you guys to do is answer each other's questions down in the comment section below. Ask your questions and answer them down below, guys. I'll do my best to answer all of your questions. If you're still kind of confused about how does a mutual fund work, or how do I actually buy this stock, how do I go through the process, ask them down below. But also check out the other videos on this channel. I really do my best to help as many people as possible. Once again, we don't sell anything here. So thanks for watching the videos. Really appreciate all the support, and I'll see everybody in the next video.